Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're digging into Potbelly's Q2 2025 report. And let me tell you, this wasn't just another quarter about sandwich sales. This was the report that basically put the entire company up for sale.
And the market? Well, the market reacted instantly. The stock just exploded, jumping over 13% the very next day as investors started to really see what was going on. And that sudden spotlight? Well, it had some pretty major consequences.
So first up, the headline beat. The numbers this quarter were, frankly, a massive validation of the company's entire game plan.
Potbelly just delivered a really solid beat, pretty much across the board. Yeah, adjusted earnings and revenue both topped what the street was looking for, but the real story here is that adjusted EBITDA up a whopping 13% year over year. That is such a powerful signal of improving profitability.
You know, one analyst called this a clean print, and I think that hits the nail on the head. A 1% revenue beat is nice, sure, but a 12.5% earnings beat? That is absolutely exceptional. It just goes to show you they have a death grip on their costs and are just incredibly efficient at driving profit all the way down to the bottom line.
So, the big question is, how'd they do it? Let's look inside their growth engine. Management was pretty clear that this was all part of a very deliberate, multifaceted strategy.
And that engine is really built on three main pillars. First, innovating the menu while still giving customers great value. Second, a huge push in their digital transformation. And third, stepping on the gas with a capital-light franchise expansion model.
And you can see the impact right here. Same-store sales grew a really healthy 3.2%. But honestly, the most important number on this slide is that traffic growth. In a world where so many competitors are just hiking prices to get by, Potbelly actually got more people to walk in the door. That is real sustainable growth. And on top of that, a record 54 new franchise commitments? That shows just how much confidence their partners have in the brand's future.
And that digital pillar? It's become an absolute powerhouse. Digital sales now make up over 41% of the entire business. Management gives all the credit to a totally rebuilt website and app that they launched in June, which just made the whole ordering process way faster and easier for customers. Okay, next up, let's talk guidance. Look, a strong quarter is one thing, but what really moves a stock is management's confidence in the future. And in this case, Potbelly didn't just nudge the bar higher, they decisively raised it.
They went ahead and boosted their full-year expectations for both same-store sales and adjusted EBITDA. And this wasn't some tiny little adjustment either. This was a clear, confident signal that the great trends they saw in Q2, they fully expect them to continue for the rest of the year.
But, and this is a big but, just as investors were getting comfortable with this awesome fundamental story, the entire game just changed. About a month after this killer report, the whole narrative took a very sharp, very decisive turn. This timeline really lays it all out, doesn't it? The strong earnings on August 6th basically put a giant spotlight on the brand's value. And it didn't take long at all for someone to notice. Just a little over a month later, on September 10th, the convenience store giant RaceTrac announced it was buying the whole company. The deal was announced at $17.12 per share, all cash. Now, this was a huge premium over where the stock was trading even after that big post-earnings pop. And just like that, overnight, the entire investment thesis for Potbelly was completely reframed. So, that brings us to our final segment, the next call. With the firm acquisition price now on the table, the entire trade has fundamentally shifted. So the question for investors isn't about Potbelly's 5-year growth plan anymore. It's now all about deal mechanics, timing, and whether there might be any last-minute surprises. The game has totally shifted from long-term fundamental investing to what we call merger arbitrage.
So we're rating the stock and outperform, and the thesis is actually pretty simple now, merger arbitrage. The opportunity is to buy the stock for a little less than $17.12 and just hold it until the deal closes to capture that difference. But what makes this really attractive is the downside protection. Those fantastic Q2 results provide a really solid fundamental floor for the stock. So if the deal were to fall apart for some crazy reason, you're still left holding a company that is just executing incredibly well.
Now for our outrageous but plausible trade idea. Think about it. The same strong fundamentals that got RaceTrac's attention could easily attract another suitor, right? A competing higher bid isn't a sure thing. It's not even likely, but it's definitely not impossible. So a low-cost way to play this low-probability event is through some long-dated, out-of-the-money call options. It's basically a lottery ticket on a bidding war, but it's a lottery ticket backed by a company whose performance just proved it's a prime takeover target.
This is not financial advice.